What's going on, guys? I hope you are enjoying your day today. Just wanted to cover Bitcoin with y'all. Alright, I'm going to get into it. So where did I leave off yesterday? I believe this line in the sand here was actually the 22.239 zone, which is this yellow mark. Obviously, we are far and away from that, and as you can see, all of my little indicators right here, the TRM, the REV, curl, RSI, TSI, HEMA5, HEMA9, etc., they're all pointing to the downside. We do have this line of resistance here at 21.566, which is staunchly holding as resistance here. I noticed in the more intraday time frames, we are seeing this like supply line here. This is horizontal, this diagonal green dotted line right here. So price has been bouncing off from this. So we do have predominantly some support here between 20.963 and 20.834. So you could argue that this is a zone of support. Okay, right here. But keep in mind, this is very strong resistance at 21.56. So we are kind of like in this no man's land, no trade zone type of situation. And frankly, from the daily perspective, we are seeing a potential bear flag. Okay, this is something that is concerning me, not gonna lie. Obviously this could break down, right? We could have daily candles below this diagonal green line, and we could print a double bottom here, okay? That I'm not gonna like, count that out. Frankly, in regards to the daily perspective, if I see a daily candle close below 20.8, then I'd feel way more confident opening up a macro short position. Now on the intraday level, if you see price break above, let's say like you see a 4-hour candle close above 21.566, I would feel way more confident in price testing this particular zone here, which would be a 3% move to the upside, potentially, possibly, maybe even up to 22.6. So keeping in mind, the trend is your friend, right? Where's the trend pointing? Okay, it's pointing down. So it's more likely you're going to have successes, and excuse me, you're going to have more successes with shorts as opposed to longs. But frankly, at this point, I closed my shorts, I believe, 2 days ago. Since then, I haven't really done much. More so kind of looking to see how this pattern breaks. Is this a triangle pattern, or is this a bear flag? On the daily, it looks like hardcore, like a bear flag, honestly. But if you, zoom into the 1 hour, it looks more of like an ascending triangle. So it's really dependent on your perspective and everything like that, on like what time frame that you are going. Are you like a swing trader? Are you a day trader? Are you a scalper? So beauty is in the eye of the beholder, if you will. But from the daily perspective, it looks like a pretty definitive bear flag, in my opinion, given this diagonal red dotted line right here. That was a macro support that was recently lost on the daily time frame, the 4-hour time frame, the hourly time frame. So this is going to be very difficult for the bulls to overcome, frankly. So price theoretically could come all the way up here, so to speak, tap this line, and just reverse back and create lower lows. That's where my mindset is at this time. We are kind of like in this shaky limbo area where, there's a lot of indecision. We did have some, bullish candles, but at the end of the day, just look at this bearish engulfing candle. Look at this bear god candle right here. In one day, price fell roughly 10% on Bitcoin, not including altcoins. Altcoins just got destroyed. Okay. Yeah. Anywho, going back to, I'm going to start with the market cipher indicator. So the market cipher indicator here with the Icon-Ashi candles, we have a potential for an interesting situation on our hands. We have a potential for a possible curling here. If you zoom in real closely, when the light blue wave and the dark blue wave kind of are closing towards a pinch, that's when you start seeing buy signals. So you can kind of see here when they start to pinch. Now it could take a couple of more days. When you see that green buy signal, it's just easier, You know, it's just more so in the bull's favor. Now, this is a lagging indicator. I like to think as daily indicators, lagging indicators. So we're already kind of seeing some semblances of buy signals here. With the, the yellow line right here, the volume weighted average price, aka VWAP, is trying to cross the zero line. When the VWAP crosses the zero line, that actually is synonymous with the buy signals and sell signals. So when the VWAP crosses down, oh, guess what? You get a green dot, or a red dot in this case, right? So when the VWAP crosses down, you get a sell. When the VWAP crosses up, you get a green dot. So these dots, excuse me, are more so indicators of a VWAP crossing the zero line, up or down. We haven't gotten that crossed yet, but just the fact that the VWAP is actually pointing to the upside is intriguing. Now, the VWAP can't get rejected from the zero line. It's better to wait for confirmations as opposed to, assuming that there will be an eventual cross up. It is possible that this could get rejected and continuation of the downside continues. Okay, so, but from my perspective, we are kind of seeing some eventual resolution to a buy signal. Okay, but that's to be determined, not complete just yet. Now, the TSI is somewhat kind of saying a similar thing, where we are getting the fast-moving indicator turn green. Usually that's a precursor to a cross. Now, these crosses, they are dynamic but also volatile. So when you see a cross, it doesn't ultimately mean that it's going to begin, excuse me, moving to the upside. That could be choppiness. It could even create a lower low. But it just means that the trend is ready to reverse, okay? Because these assets are hella volatile. Now, if you're using these indicators to trade like gold or Goldman Sachs or something like that, or like, pretty hefty commodities in overall market cap, now this would be easier to read, but because crypto in general, Bitcoin is the largest cap of them all, it's still volatile as hell. So from a daily perspective, keep in mind daily indicators are lagging indicators, regardless if you're using an RSI, a TSI, TMA, MACD, etc. They're all lagging indicators from a crypto perspective. So seeing this here, this is lagging. We have been kind of like pumping a little bit to the upside, rejections and stuff like that. Significant points of resistance are playing out. So once those points are hit, you'll see a retraction. But yeah, I'm going to go to the MACD here. The MACD showing a little bit of a resurgence in bullish momentum. We are getting waning sell pressure, just how we saw back here. And the MACD slow moving average is actually crossing the zero line. You can't really see it, but it's coming up right there. Okay, so that's not too great. I prefer looking at the histograms over the lines, in my opinion. But it's just something to consider that even though that the momentum, the selling pressure is waning, there are more buyers and sellers at this point, but the overall trend is to the downside, if that makes any sense. But just something to consider. So let me go to the TSI. TSI here states as long as price is below 22K and change, we can expect, continuation of the downside. So where's 22K at this time? So yeah, this was the previous line in the sand, but the candle closed and the target is moving. So let me just go 100, 2000. Yeah, I'm just going to go flat 20K. Wait, did I do that wrong? I think I did that wrong. I put 200,000, didn't I? Oh no. 22,000, I put 20,000. Crap. Okay, let me redo that. Sorry. Alright, that's 2,200, 22,000. There you go. That should be it. Okay, so as long as price is below this frickin' line right here, you cannot be bullish on the daily perspective. And frankly, price is currently getting rejected right here, falling back into this pattern. So you have to be bearish until stated otherwise. Now, I'm going to go to the Macdx. The Macdx here is showing, um, okay, this is complicated here because the fast moving average is starting to curl a little bit to the upside, but as you can see, the red line, and I like to, with the MACDX, I care more so about where the red line is pointing as opposed to where the teal line is pointing. Um, at this time, the slow moving average is still pointing to the downside. We could get some like pops, up in relief, in terms of like a relief rally from this indication, but as it stands, the slow moving average is pointing to the downside, so I'm going to put more onus on downside moves. Yeah, so the RSI is in the bearish control zone. It has yet to really backtest the slow moving average as resistance. It's just been more so a clean drop to the downside. There was some resistance here on the daily perspective where like there was an attempt, but it was just too strong of momentum and it's completely broke through. So yeah, I honestly, from my perspective, we could see stuff like this where it pumps up and kind of gets choppy, ultimately gets rejected, and we go lower. I do think that we will eventually go lower at some point in time, but there's going to be some consolidation periods, there's going to be some pumps, there's going to be some dumps from the daily time frame. But yeah, ultimately, we are not in the bullish control zone where you want to take profits. We are in the bearish control zone where you want to consider spot positions in regards to buying the dips. But obviously right now buying a dip right now is catching a falling knife, trying to catch a falling knife. It's just not a good idea. There's other indicators that you can see that will help you in finding a better local bottom to initiate something like that. If you're not already in a position, it's more so in a wait and see period. But yeah, the TMA is one of my favorite indicators because it's pretty clear cut usually. The fast moving average is color coded, so you kind of can see where you're at. The slow moving average, like if this is below the slow moving average, then the likelihood of downside continuation is high until it hits a oversold zone, which is right down here, which this has never touched. Okay, so we're more so kind of like here. If I were to consider this phase, I would really resemble this to this right here. We are nowhere near a decision point or anything like that. The price has yet to tag, or I'm sorry, the TMA has yet to tag the slow moving average as resistance or anything of the sort. So at this time, it's better to wait and see. There's obvious patterns that are apparent, and I want to see breakouts of that particular pattern before I initiate anything of significance. Okay, so now I'm going to go to the 4-hour time frame. That's the daily perspective. Now let's go more intraday, shall we? Okay, so on the 4-hour time frame, as you can see, price is broken back into the pattern here that we have. Now, on the 4-hour, it looks a little bit different. You could argue on the 4-hour that we've already broken out of this and we're back testing it as support. So that's kind of interesting. I'm going to put a little dotted line here. So that's interesting to see. Now, on the 4-hour, we're actually nearing a potential cross of the 9 EMA and the 4 EMA. We still have an hour and 14 minutes to go. But if we see the 9 EMA and the 21 EMA act as support, then I would be a little bit more biased to the upside. But keep in mind, because we're in a downtrend, the upside is limited AF, okay? We are limited to the 100-day moving average. I'm sorry, to the 50-day moving average and the 100-day moving average. And funny enough, the 100-day moving average is close to the line of resistance that I marked yesterday at 22.619, and the 50-day moving average is really close to the 22K zone that I marked today. So essentially, these two moving averages are really strong lines of resistance. They've yet to get tested much since this cross back in the 17th of August. So yeah, if you see price tag these particular zones, if you're in a long, if you're grateful, right? Like if you're just super lucky and you got into a long, like say a couple hours ago yesterday, and you're riding this out, you could take profits around here, or you could take profits around here. Like it depends on your risk tolerance, right? I mean, your take profit one could be at like 22K, your take profit 22, could be at 22.6 or whatever. That's risky as shit because we're still kind of in this consolidation phase. There is support that's kind of shown itself, but also you're kind of far away from support. Like, for example, I like to long support and short resistance, okay? So you're right now at resistance, so longing resistance isn't necessarily conducive to a safe move. Now you're being a little bit more you're risk on when you do a long like this, but you have some logic behind those things, right? If you are in fact in a long, I don't condone it. This is not financial advice or anything like that. This is more so theory. But yeah, when you see the 4 hours start to see the 9 exponential moving average and the 21 exponential moving average as potential support, the inklings of a beginning of a shift, right? When you see stuff like that, you kind of have to take in consideration. So for example, if I see this hourly candle close, above the 9 and the 21 EMA, then game on. I would expect, potential, like maybe a pump over here, close to where I like to take profits not exactly at the line, but like a little bit below the line. That's kind of like how I like to do my swings. Um, I would even consider this a damn scalp because I mean this move could happen within a few hours as opposed to a few days. So, but yeah, like keep in mind the exponential moving averages are in the red. Okay, so this is really risky stuff to be doing if you're longing right here. Like look at these exponential moving averages. They're not only red, but they've expanded away from each other. So that is conducive to a strong trend to the downside. My best bet here, if you're patient, let price consolidate between this range here, maybe even this range. And if you see a break to the downside at 20.8, you can definitely feel comfortable opening up a short position that's, probably going to hit, you know, somewhere around these zones here. Or conversely, if you see a 4-hour candle close above 22K, then you could probably expect zones at about here. Okay, right now we are kind of testing the 9 exponential moving average as support, so that's something that you have to take in consideration, but it's better to wait for a candle close. But anyway, I'm going to go to the indicators because they are the ones that actually show interesting perspectives. All right, so we have a slightly higher high on the money flow, ever so slight, so I wouldn't take it as like, hey, go long right now. By no means. This could eventually, come to the downside. As you can see, we're kind of having a moment for the bulls to kind of continue to the upside, but keep in mind, this is really, really risky stuff. If I were you, and if I wanted to long the 4-hour, I would wait. I would wait for this hill to continue, right? It could curve whenever. It could curve, above the 60. It could curve below the 60. Let's say it curves below 60, right? And then I'd want it to come back down and then initiate the move to the upside. Now that would be a better situation as opposed to now, because we have another downward slope, but a higher wave than the previous wave, because this wave went super duper low. I wouldn't be surprised to see the next wave kind of be slightly higher than the next to then initiate a long. But that's going to take some time, okay? Like, even if it projects to where I'm expecting, that is basically 4 days from now, okay? So, it's going to be a long wait and see. I don't know if people have the patience for that, but yeah, I would much prefer seeing something like that to initiate a long. But the money flow is thick in the red, and anytime money flow has been trying to go to the upside, it's just been really, really weak. Really, really weak attempts at changing the narrative, changing the bearish narrative. Super weak. Now, I circled all of the positive money flows. Now look at the negative money flows, and you can kind of tell the trend, right? You don't really need me to say exactly what you see, but yeah, you can see where the market is leaning at this time, or has been leaning, since July. But yeah, let me continue. Okay, so we do have, I'm going to go here, a bearish engulfing candle so far on the 1 hour. So if this continues to outperform against this one, then we can expect a break back into this pattern. And usually when you break out of a pattern and break back into it, that is ultra positive for the direction. I'll repeat that. Let's say this wasn't a bear flag and it was a bull flag. Let's say like it breaks to the downside on a bull flag, but then it breaks back up into the pattern. That's super bullish because it was essentially a fake out to the downside, and then the bulls just continue pushing the price up and up and up. In this case, this is the exact opposite. The bear flag broke to the upside and then decided to break back into it. Okay, so if this candle actually breaks back below 21.566, that is ultra bearish. I would expect, price to continue to the downside. Now there is some caveats here that I do want to mention. We do have an inverted candle pattern right here, this hollow yellow one, this inverted candle pattern. That's actually a bullish pattern, okay? So if you want to front run any moves to the downside, essentially like if we lose this candle, if this bullish candle is invalidated, then basically at 21.263, you see a 4-hour candle close below this, then it's pretty high likelihood that you're going to see prices down here, prices below this line. So just something to consider. Okay, so yeah, I'm going to go to the 4-hour over here. What exactly are we seeing? All right, we are seeing momentum wane to the downside. Okay, we are seeing the lines pump to the upside, which is interesting. But usually when the zero line gets tagged by like a pretty prominent time frame, like 4-hour, high volatility ensues. So you can expect volatility to slowly increase within the coming days. That is interesting to see, but as the current histogram is concerned, we are seeing waning momentum to the upside, and now it's pivoting to the downside. So something to consider from the MACD. All right, but as long as price is above 21.36, now let's look at that. I'm going to turn this yellow. Okay, 21.360. Okay, that is right there. So as long as price is above, I'm going to go, yeah, there you go. As long as price is above 21.36, then you can be bullish. That's rather interesting. That's nice to see. Okay, from the 4-hour, the TSI, and I like the TSI more so than other indicators, especially the slow-moving average ones. Yeah, so that's a nice little nugget that the TSI gave us. So this is interesting. So the overall trend is actually moving to the upside on the 4-hour. As you can see, the slow moving average has crossed to the upside, but it's constantly getting rejected here. So keep in mind when that happens, you can expect like bearish divergences, which they print out like this. Yeah, like this as well. So there are times where this could actually reverse. So it's better to keep your eye on that. Okay. Now on the 4-hour, the RSI is crossing above the bearish control zone here, and we are getting a back test once again. If this could hold, we had it here on the RSI a few times already. So we had 1, 2, 3, 4. So keep in mind, the more times things are tested, the weaker it gets. But just the fact that it is outside of the bearish control zone is not a bad sign to see ultimately. Okay, so we're kind of getting some interesting scenarios here where like the daily looks bearish, but the 4-hour is looking a little bit more bullish. It's giving bullish signs for the time being. consolidation is to be expected from my overall analysis right now, from the daily to the 4-hour, but let's go to the 1-hour event after this one. So yeah, on the 4-hour, 4-hour actually crossed above the slow moving average on the TMA. Something to consider. Now, the 50 line on the TMA is kind of like the 0 line on the MACD and also the 0 line on the TSI. So we need to see this line above the 50 to truly be bullish. We had a little taste of that earlier today, but as you can see, it's kind of gone back down. So if you see this TMA actually cross back up above the 50, then it's safer to say that we are going to see some continuation of the upside. But we're kind of like in an awkward phase where like we had a little taste of it and then it kind of just went back down. So it's kind of like a wait and see period. And so in conjunction with like the current pattern, if you see the TMA crosses above the 50 and you see a bullish candle above the 21.5 zone, then it's safe to say that yeah, you can actually expect more prices to the upside, but as opposed to the downside. But at this time, we just don't have enough data to actually validate that statement just yet. Okay, so we did get a sell signal on the 1-hour. Right, it was above the 60 line. Let me look at the money flow. Money flow is still green though. Money flow is still in the green, but about 3 hours ago we got a sell signal. Basically a candle rejection off of the 100-day moving average on the 1-hour. Yeah, pretty substantial, pretty accurate right here. And we are getting bearish engulfing candles, and we have like 1 more minute, but yeah, it's pretty obvious that the 1-hour lost the 9 exponential moving average as support. As you can see, we had support, bearish engulfing candle, break below the 9 EMA. Now we're seeing parabolic moves to the downside. But as the 4-hour stated, as long as price is above 21.360, then you can expect prices to continue to the upside. So there could still be consolidation, I see right here, but as long as we ratchet up the average here. I'm going to close these because it's getting a little convoluted. And here. So as you can see, we have a low. We have a higher low. We had another higher low. Whoops. Now, can we print something like this where it's a higher low? And now, if we see a close below 21.4 on the 1-hour, 21.438, hourly candle close below this, that would actually initiate the first lower low of the trend, the recent trend. So that's something to consider as well. Okay, now I'm going to go to the TSI. What is the TSI saying? TSI actually recently just crossed red. Oh, yeah, literally just crossed red. It is above the 0 line, so if I were you, I'd keep an eye on the trend. So we had low, we had a low, higher low, higher low, higher low, higher low, higher low, slightly higher low, higher low. So there is a trend that you can keep track of here. So if you see a pivot that is slightly higher than this last low, then we're still moving to the upside. Yeah, which has been pretty consistent, but as and the daily money flow really kind of showed it. Like, yeah, there is a slight positive trend, but it's very gradual. So just keep an eye on the trend on the TSI and also on the hourly candles. If you see a break of trend, then you can be more confident in initiating shorts. Or if you see trend continuation, then yeah, feel confident with like opening up fresh longs and stuff like that. Okay, what else here on the 1-hour? Oof. Okay, on the 1-hour we did get a sell signal. Now, as you can see, kind of correlates with like the daily money flow. Like it's just on the MACD we have ever so slight higher highs. So this could theoretically come all the way down to this line, but still be bullish. But as you can see, we do have some consolidation to the downside that we need to experience in order to kind of ratchet up the price if it still wishes to maintain that trend. Even on the TSI here, we do have an obvious trend to the upside, but as long as price is below 21.637, then you can expect prices to continue to the downside. That is also in conjunction with the Macdx. Macdx did get a sell signal about an hour ago, and the slow moving average, the red line, is crossing to the downside, indicating further movements to the downside. The fast moving average is also pointing to the downside as well. RSI tagged the oversold zone ever so slightly, but it got rejected here. So the 50 line on the RSI is actually super crucial. So if this RSI event is to sustain itself, it not only has to bounce off the 50 line, but it has to break the slow moving average. I believe it was not 1 but 2, yeah, 2 hours ago it confirmed across to the slow moving average, which is like not that great. So we are in the neutral zone, but RSI is below the slow moving average, so the bulls basically have to step up here to break that trend. But well, we got to see how that turns out because it's definitely in the neutral zone. TMA did cross below all the way down here, and it has yet to cross above the red line here at the 70 mark. That's interesting. We do have a slight trend to the upside, and since we haven't necessarily tagged the top side, I actually, because of this 1 hour TMA, I feel a little bit more bullish, not gonna lie, because we're kind of seeing a potential bounce off of the TMA, and we have yet to really tag the oversold zone. So from my perspective, this is actually a really telltale sign that we could possibly just be at the bottom of a consolidation movement to then try to hit back to the upside. But now, if you do see a lower low on the TMA, so let's say like we do get that bounce, right? We get that bounce, but then you kind of see something like this, that will indicate a fresh lower low, because we already kind of do have this lower low trend. We have high, lower high. Okay, so we need to see this trend right here break either to the upside, or we need to see this trend validated where it just there's a bounce down here, and that would initiate a new leg down. So TMA on the 1 hour is pretty important in regards to the overall trend, because this is a fast moving average. RSI and the TMA are the fast moving averages, so if you want information printed immediately for you to kind of like better assess the market, I would pay more attention to the TMA and the RSI. If you're more so kind of like, you know, waiting for a spot position or something like that, I would definitely recommend the TSI or the MACD. All right, anyway, I'm actually gonna close it out here. Well, final assessment is, okay, final assessment. This overall triangle pattern did break to the upside, did create a higher high. I'm waiting to see if this pattern will sustain itself. At the end of the day, this was a higher low instance. This was a higher low instance here as well. So until this trend is broken, I can't ultimately be all that bearish until these trends are broken. But keep in mind though that there is obvious topside resistance as well, and we're closer to resistance than we are at support. So really at current price, which is, you know, at 21.5 basically, we have like really an 1% to the downside to play with. We have possibly like 2.34% to play with on the upside maximum, frankly. So I just don't like the margins, how they are, frankly. So I kind of just I'm more in wait and see mode to see what the trend direction, because we're seeing a lot of dichotomy in the market. Volume is coming to the downside. The overall indicators are pointing bearish, but we're seeing higher lows. So it's just like a lot of like mixed feelings in the market. I'd much rather see some resolution before I put in something, you know, in the order books. But yeah, I'm gonna leave it at that. Yeah, sorry I wasn't necessarily like definitive as of the last couple videos, but anyway, thank you for your time. I wish you well, and have a great rest of the day. Bye bye.